Hi folks, this is Lee with the Market Sense. For the week of December 22nd, 2020, this will be our last video of the year. The charts in this presentation come to us from the Trade Navigator software. And this is a weekly bond market chart. And are you guys tired of hearing the word sideways? Because everything on this entire page right here is basically sideways. And it's only getting worse. You can see they're just kind of shrinking down to nothing. They could bust out on either side, but if they did, it wouldn't really mean anything to me. I don't expect them to do much for the rest of the year and maybe even for the first part of next year, but that remains to be seen. For this week, we're kind of looking at the mid 171 range, call it 171.16 down here for support. Resistance mid 174, 174.16, 17 up in here. Good chance they'll hold both of those. Good chance they don't actually get to either of them. Trading's just kind of quiet going into the holiday, and that's to be expected. In stocks, we had basically a gift. They were down here to this 3604, was it, or 3613 support early in the week, and it was just a gift. They were down there Sunday night and early Monday morning, and it was based on fears of COVID, which is a little weird. Of course, we have COVID. We've had COVID. And so I think that was a gift. I think we won't see prices down there again, although, Congress and the president getting a pissing match about the bailout, who knows? But that's what I think. I think that was the gift. That's what we should have done. I think there's a chance they'll go up to 37.47. Not a great chance, but a chance. The tendency is for the stock market to go up into Christmas. It's not a massive rally, but there's a tendency for it to go up into Christmas. What people talk about more is the Santa Claus rally, and that's misunderstood a lot. The Santa Claus rally is actually a few-day rally that occurs between Christmas and New Year's. And it also, it's got a fairly good probability, but the amount of movement is not substantial normally. It's just sort of a tendency to go a little higher. And that's what we've got for the whole rest of the year. And at the same time, we have very low volume. A lot of people have taken the end of the year off already. That, of course, could mean moves can get exacerbated and kind of move more than they should, which is what I think happened Sunday night when we got down to support. But I just don't expect there to be much for the rest of the year. Hence, not real excited about this week and probably not even going to bother with next week at all, and therefore no report. In the QQQs to represent the NASDAQ, this does not show the Sunday night trading, so instead they just held support in the 304.42 area Monday morning. And that certainly looks like they could go to 313.70, that is. If they were to break down to 298.63, it's certainly not the end of the world, but it would take some sort of fight, I think, between Congress and the president for that to happen. And I think they'll actually get the stimulus done and not continue that fight. So higher prices are the possibility or the probability if anything happens. I'm just not looking for anything magical. I think the trading's too thin to be too excited and certainly too thin to be too aggressive. And I think that's what we've got for the rest of the year. So that's all we're going to talk about with the markets today. I certainly hope everyone has a safe, healthy, happy Merry Christmas and Happy New Year. And we'll come back in 2021 and hope to make this a little better than 2020. Not so much from a trading standpoint, but come on, for the year, 2021's got to be better, doesn't it?